What's safer, your bank account or Bitcoin? There's this perception about Bitcoin that it's this super risky asset, and I think a main reason why people think that is because it's very volatile, right? It goes up very fast, it goes down very fast, and it's also just a much newer asset. A lot of people aren't very familiar with it yet, but there are also some big risks with a traditional bank account. So in this video, we're going to compare the two, going through some of the pros and cons and talk about which place is a better place to keep your money safe. Before we do get into it, please make sure to like the video and subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. Let's start off by talking about bank accounts. Now I'm sure that when you get paid by your job and you deposit that money into your bank account, you feel comfortable, you feel safe, you see the amount sitting there for your balance and you think, hey, my money is there. But the fact of the matter is that the banks actually don't hold on to your money. They lend it out. And we have this fractional reserve banking system that I really don't like and I really don't trust. So when you deposit your money into the bank basically takes that money and they can take as much as they want. They can take all of it and they can lend it out. And the reason that the banks do this is because we live in this credit-based system where we need to see credit keep expanding. If credit does not expand, then we see existing credit default, and it leads to a bunch of problems that the United States can't have. So when you deposit your money into the bank takes that money and they lend it to the government by buying US Treasury bonds. And because we have so much national debt and it's continuing to grow, the banks are going to need to buy more and more of these bonds, especially as other people don't want to invest in them with the supply growing. The banks also lend out your money to other individuals for a home loan, a car loan, a business loan, and they do this, right, to expand the credit-based system. Now, it used to be that the banks at least had to hold some of your money, and what we call this is a reserve requirement. So let's say the reserve requirement is 50%. This would mean that the banks would need to hold 50% of your money there, and they could lend the other 50% out, or maybe the reserve requirement could be lower, like 20% or 10%. And I believe that it was pretty low until we got to around 2020 and we got hit with COVID and we had this monetary expansion, and then we just saw the reserve requirement be done with altogether, because with the monetary expansion, with the large credit expansion, the US government realized that, hey, we need to make sure credit does not contract. So they lowered the reserve requirement to zero so that the banks can basically lend out all your money. So I think that the banks are actually very risky. I think that holding a lot of money in a bank account is pretty risky. And we can actually go ahead and take a look at a little visual here, which shows the unrealized gain or losses on investment securities for the banks. And as you can see, starting in 2020, we see the unrealized losses for the commercial banks really stacking up. So I don't think that the banks are in a very good position right now. I think that the banks are pretty vulnerable. And personally, I would not feel comfortable if I had a lot of dollars in a bank account. Now, the great thing about the traditional banking system is that if the banks do run into problems, if a bank does fail, the FDIC insures up to $250,000 of your money. So if you have under $250,000 in a bank account, they will basically give you that money back, or they say they will. But the question is, how do they get this money, right? How do they get this money to insure you? They print it, right? They create new money. And really, this is a main reason why it's just not smart to keep money in a bank account at all, really, at least, dollars. Because dollars are just depreciating, and we know this by now. If you've been keeping your money in dollars for the past 2 decades, you've been losing. If you've been keeping your money in Bitcoin, stocks, or real estate, you've been winning. And the reason that dollars have been losing is because the supply just continues to grow, right? This is economics 101, supply and demand. If the supply continues to grow, we're going to see the value of that thing go down. So we can look at a little chart here of the M2 money money supply from around 1970 to present. And as you can see, the M2 money supply, or the credit out there, has just continued to grow. So holding dollars is really not a smart move. And that's why I personally just don't keep money in a bank account. I keep a little bit in there to pay for my bills, but I just don't think it is a good place to be in an asset where the supply is continually rising. Now, typically in an environment where the money supply is expanding, where credit is expanding, the banks are going to be all right? Because people aren't defaulting on their loans as much if the credit is expanding. Now, I do think that this is going to lead to other problems for the banks, and I honestly think that the banks are going to be kind of screwed at the end of the day, no matter what, because if the money supply continues to expand, if credit is expanding, then we're going to see inflation continue to go up, and the banks are going to take losses on these long-term treasury bonds that they're holding that are only yielding like 1%, 2%. So I think that the banks are really in a lot of trouble no matter what, but at least when credit is expanding, we aren't seeing as many people defaulting on their business loans or their home loans. When credit contracts, right, that's when we really start to see the banks run into big problems. We saw this in 2008. We can look at Washington Mutual, which is the largest U.S. bank failure in U.S. history. Washington Mutual was overexposed to these subprime mortgages. They were making bad loans to people that were not qualified. They were overexposed to these bad mortgage-backed securities. And because of this, they took big losses when we went through this housing crash, and everyone started pulling their money out and the bank failed. We can also look at Silicon Valley Bank a couple of years ago. As we saw credit start to contract, as we saw the M2 money supply go down after it went up with all that COVID spending, we saw Silicon Valley Bank run into big problems. And actually, the reason that Silicon Valley Bank ran into big problems is because of their U.S. Treasury bond holdings, right? They were overexposed to these long-term U.S. Treasuries, and they had a lot of unrealized losses. We saw a lot of these tech companies pulling their money out of the bank very fast, and it led to the failure of Silicon Valley Bank. So a bank run can happen very fast, and a bank can fail pretty fast. And when that happens, the government typically has to step in and either bail out the bank or provide liquidity to the system so other banks don't fail. And that just leads to more inflation. So personally, just not a fan of the whole fiat system in general, the banking system, the way the money supply needs to expand. I think that if you're keeping dollars in a bank account, you are losing. I would rather keep my money somewhere else, and I think a much better place to keep it is in Bitcoin. Let's talk about Bitcoin a bit. I want to start off by talking about the integrity of the money. I already talked about the dollar and fiat and some of the problems there. The main one is that the supply of the money needs to continue rising. With the supply going up, this leads to the value of the money going down, right? It's simple, supply and demand. The great part about Bitcoin is that we have a finite supply. There will never be more than 21 million Bitcoin out there, and this is what we want to see in a money. When the supply of a money is limited, or the supply of a money is growing at a very low rate, we see that the supply of goods and services is growing faster than the money, and this leads to things getting cheaper over time. This leads to a deflationary society, and this is what we want to see, right? We want to see the money holding its value so that you can buy more things, and we want to see production. We want to see things get cheaper. We want everyone to prosper and have a better life. So really, our existing form of money, the only reason why we see prices going up is because the money supply is going up at a faster rate than the supply of goods and services out there. So I think that Bitcoin is a much better form of money. It's decentralized, meaning that we don't have a central party controlling it like the Federal Reserve, and it's secure, right? It's been doing the same thing for 16 years and has been doing it very well. And because Bitcoin has been performing as money so well, it has gone up a lot against the dollar. Let's go ahead and take a look at a little chart here, which just shows Bitcoin against the US dollar over the last 15 years or so. And as you can see, Bitcoin's gone from around $0 to around $113,000 per Bitcoin. And that's telling me something, right? That's telling me that this is just better money and that we're kind of transitioning towards a newer system, a system that's going to be built on top of Bitcoin. So I don't think it's a bad idea to get a little bit in case this scenario plays out. One of my favorite things about Bitcoin is that you can hold the Bitcoin yourself with a cold storage device like this. We talked about bank accounts and how if you have a lot of fiat, a lot of dollars, you kind of need a bank account in order to facilitate trading those dollars. And the thing that sucks is that you have to trust the bank, right? Who is lending out all your money. But the great part about Bitcoin is that you can be your own bank. You don't need a bank account, right? I can put all of my Bitcoin onto a little device like this, and I can keep this device safe, and I'm in full control of my money. Now, there is still a little bit of third-party risk, right? You have to trust the maker of this cold wallet. So you want to make sure that you do your research and pick a cold wallet that is safe and secure. This one right here is the Cold Card MK4, and it is one of my favorites. They have an emphasis on security. It's a Bitcoin-only wallet, and it's highly regarded in the Bitcoin community. A lot of people that I trust in the Bitcoin space have backed up this wallet. So this is one of my favorites to use. And I just love how I can be in full control of my money. And really, all you have to do is trust yourself with Bitcoin. You don't have to really trust a third party like with the fiat system. I can keep my good money on this little device and be in full control, which I love. It gives me a lot of freedom. Bank accounts can always be frozen, right? If you want to send money across the globe, oftentimes it's very difficult. With Bitcoin, it's very easy. You are in full control. Now, when it comes to Bitcoin, I really do think that cold storage is the way to go. I really think that you should trust yourself and be in full control of your wealth. But if you don't trust yourself, there are also Bitcoin custodians out there. And I think that some of these better Bitcoin custodians, I prefer them over a traditional bank because at least these Bitcoin custodians are actually holding your Bitcoin. Whereas with a traditional bank account, like we talked about, they're lending your money out. So my favorite Bitcoin custodian right now is River. They hold your assets one-to-one. They're not lending out your Bitcoin. They're not messing around with it. And they actually have a proof of reserves on their website. They are highly regarded in the Bitcoin community. So for anyone looking to get started in Bitcoin and just looking for a safe place to start stacking, I think that River is a great place. A very popular custodian is Coinbase, right? And I guess you could call it an exchange custodian, whatever. They'll hold your Bitcoin, right? If you want them to. And they claim to hold their assets one-to-one, which I think is great. The thing about Coinbase is that Coinbase is a very large entity. They are now somewhat integrated with the US government, with these Bitcoin ETFs, kind of being in control of a lot of Bitcoin. And I think that there is a fear out there that Coinbase could kind of be captured by the government and maybe not allow customers to take their Bitcoin off of Coinbase. And I honestly think that that is a valid fear. So personally, I would not feel super comfortable keeping a lot of Bitcoin on Coinbase or Coinbase Wallet. I would prefer a custodian like River, but at least Coinbase claims to hold their assets one-to-one. I think that's the great part about Bitcoin custody is that it's not fractional reserve, right? They are actually holding your assets. If you do choose to use a Bitcoin custodian, it's important that you choose a good one because historically there have been bad Bitcoin custodians out there. We can look at Mt. Gox, which was the world's largest Bitcoin exchange back in 2014, which got hacked and a lot of people lost their Bitcoin. Over 850,000 Bitcoin was lost. We can also look at FTX, which was a very large cryptocurrency exchange, which collapsed a couple of years ago. They were basically doing what these fractional reserve banks are doing. They were lending out assets on the back end and moving them around and using them to pay for other things. So they weren't just holding assets, and over 150,000 Bitcoin were lost in the collapse of FTX. And I think that we're going to see some of this FTX Bitcoin be given back to customers through these like court hearings here soon. But you don't want that to happen to you, right? You don't want to buy a bunch of Bitcoin and then lose it all. So if you are going to use a custodian, it's very important that you choose a good custodian like River. To provide a little recap here, when comparing the safety of Bitcoin and a bank account, I actually believe that Bitcoin is a lot safer. I love that with Bitcoin, I can be in full control of my money. I love that Bitcoin is a better money that holds its value. And with a traditional bank account, the banks are just lending all your money out. Personally, I would rather store my wealth in Bitcoin on a cold storage device where I know my Bitcoin is safe, it's not being lent out, and I am in full control. That's going to wrap it up for this one. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.